Day trading is mathematically indistinguishable from roulette. That's not an opinion. That's what the data says. And until you accept that one fact, every strategy you try is going to eventually fail. There's a single number that tells you how predictable a data set actually is. It's called the Hurst score. And a Hurst score around 0.5 means the data is essentially random. And you know where I'm going with this. Intraday price action scores 0.5. It hovers right around 0.5. And what else has a score of 0.5? Roulette. Game of roulette. Same number, same game. Think about this. If I told you to bet your next roulette spin based on the last 10 spins, you'd scoff. You'd refuse. You know the wheel doesn't remember. You know it's still 50-50, and yet that's exactly what we do every day in front of a chart. We stare at the last move and convince ourselves it tells us something about the next move, when it really doesn't. Now, to be fair, given long enough timeline, 10 years, 15 years, there are traders who make real money. Most of them make it in a period of time, not year after year after year. The apex $1 million payout guys are real. Their skill is undeniable. But here's the question that should keep us honest. Where is the second $1 million payout from any of those traders? And they're awesome traders. Awesome. The best in the world. If the game weren't essentially random, you'd see the same names doing it twice, 3 times, over and over again. But you don't. You don't see that. The few who do win consistently over a decade share one thing, and it's not a strategy. It's a tremendous respect for the market. They never oversize. They wait for the spots that actually matter. So the real problem isn't finding the right strategy. The problem is treating an essentially random game like it's not random, like it's predictable. And that's the fork in the road most prop traders take, and that's where they lose. I solved it differently, and my solution doesn't depend on strategy at all. I treat every entry as if it's random, because it is. I run an arbitrage. My solution is to keep a small live account on a separate broker, $1,500, and every position I take in a prop firm eval, I hedge on the live side. That changes the math of when I get paid out, and that's the whole game. Most traders are trying to win on the rarest possible outcome, reaching the funded payout. Under perfect discipline, that's about a 10% event. You cannot build a business on a 10% event. So I flip it. The most common outcome is failing the eval. That's where my system actually pays out. The second most common, passing the eval and failing the funded, more or less breaks even. And the rarest outcome, actually reaching the payout, it's pretty much break even, but you get a second payout opportunity, which I call the bonus round, where you make $800 if you fail from there, or $900 if you win from there. So I make the lion's share of my money exactly where every other prop trader loses theirs, on failed evals. That's the only way I've found to solve intraday trading at scale long term. It's a random game. The solution has to respect that. The moment you accept the randomness, your bias goes out the window. You stop fighting trades that are $1,000 against you. You stop oversizing into hope. You really have to come to terms with, it's random, dude. Miss, it's random. I built a piece of software around all of this. It's called TradeBlade. I'm really proud of it. I hope you like it. Check it out if you want to. If you don't, that's okay too. Tell me what you think of it, of what I've said, because I'd like to hear your feedback. I'll read every single message. So go ahead and say whatever you want to say. You're not going to hurt my feelings. Good luck to you. Trade clean, and I'll leave you with this. Stop predicting a coin flip. That's the bottom line.
Welcome to TradeBlade.